Teddy Keckstead from Forex Trading Unlocked, and we are here on April the 16th for a Forex market daily analysis and live trading webinar for you. And real quick, let's just get our disclaimer up to remind you that this webinar is for illustrative and educational purposes only. So we have a lot of trading signals that were triggered yesterday in multiple markets. We had some that were triggered earlier in the week, and they are all high probable Japanese candlestick patterns. And if you want to learn how to trade these patterns, you can read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and paperback version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the Forex markets. And with that, let's get to the live action website and let you see what we're talking about. So we have the Forex-Trading-Unlocked.com website. We have the workstation page already pulled up. Yesterday, we had a bullish engulfing line buy signal in the dollar index with a target zone up at around 100.60 up to 101.19. So this upward target zone puts us right up around this last lower move high, swing high, which is kind of setting the upper barrier of the range that I think we are starting to set. Is this bullish signal meaning that we're going to go and make a blast off to make all-time highs up here above what we did back in March? I'm not even calling for that remotely. Right now we have a target into this area. Maybe we just hit the lower barrier and we fall short of this last swing high, and then we start to chop around in this zone. I think most likely that is what we're developing. But right now, we also can see today we have some follow through with bullish momentum towards the dollar. We did get this short-term buy signal. So we will see how this manifests, but I would think that over the next few sessions into next week, we're probably going to see us buffer resistance for the dollar index, probably, like I said, hitting this lower part of 100.60. And then should we take out this 100.98, this last swing high, not only would that mean that we are crossing the downward sloping resistance that sets the short-term trend, but a higher move high after a higher move low is indicative of what? A neutral to bullish trend. So that would mean we're probably going to see some more support in the dollar as a whole across the currency crosses. So let's see what we got going on. We have a ton of signals that are going on today. So we have the Euro US dollar with the biggest component of the, let's get this signal right. Sorry about that. Euro US dollar. Okay, now we have it typed in properly here. So the Euro US dollar has been swinging around quite erratically, like all these currencies have as of late. And this morning it made a lower move low. Now you can see that it's right around the 50% of the range that it was already established today. We had the numbers that came out, unemployment number claims that came out in the U.S., and were definitely devastating as expected. Yesterday, we had a dark cloud cover sell signal that was triggered as of the close of yesterday, and now we are targeting down towards this last swing low here of around $1.0764. Now, the key is we have to sustain trading below this upward sloping support line. If we do, then we'll probably have a good chance at taking out this lower ending support right here. So as far as can we go much further? Well, it's kind of like the dollar index, this being one of the biggest components. I think that we're about to establish a range. So I think that we're buffering around the lower part of support, especially since if we take out this support line and close below it and take out this low, then that will mean we'll have had a lower move high with a lower move low, which means that most likely, and that would also support our dollar support issue, is that if the euro is weak and riding support and kind of is bobbling around, so let's say from this 109 area down to 106, and starts to just chop around over the next couple months, which is very likely to happen. We've had all this volatility. Europe seems to be coming out, crossing the curve on the coronavirus. Let's pull up the totals right now. As you can see, Germany, which is in fourth, is already coming out of the coronavirus curve. They're starting to go back online. They're putting people back to work. Italy and Spain and France are doing the same. The UK, I think, is getting to get ready, but we know Germany is officially going back online next week. So with that being said, I think that gives some support. So I don't think we're going to have too much of a negative pressure, but we do have this short-term sell signal, which definitely is targeting right now this $1.07. Your risk level is the $1.0989. Any trading above this would be indicative of what? A higher move low following and then creating a higher move high, which is a bullish signal. So that would negate our dark cloud cover. But right now, we are aggressive bears. Just to show you what our positions are right now, we are short the euro US dollar. That was triggered with that signal yesterday. We also are long the US dollar Swiss. There's a signal that was triggered there. We have the New Zealand dollar, US dollar, and the Australian dollar, which we are short as well. So we will get to those positions as we get to the different markets. We also have positions on in the US dollar Canada, in the binary options market. We have the US dollar Swiss, which we're actually long, just like we are in the cash, and we actually have two strike prices there, and we also have the US dollar Japanese yen. So we'll get to those as we encounter each of these markets here. So we showed you the one, we are short the euro US dollar. And we are following through with this sell signal here. Now let's take a look at the next biggest component in the dollar index, the British pound US dollar. Now, the British pound US dollar has been in a rally mode for the past week and a half. As you can see, yesterday a dark cloud cover sell signal was triggered once again, and right now it is slightly lower on the day. Unlike the euro US dollar, it did not make a lower move low as of yesterday's trading, so it's kind of holding its own right now. But we do have this downside target zone here where we're looking for the market to fall down to about $123.51 down to $122.70. So somewhere in this downside target zone. This also would be what? Should we hold up and stay above this last swing low here, higher move low, then that would mean what? That we're starting to hold a neutral pattern for the British pound US dollar, which would also coincide with our theory that the dollar index, while it may remain strong and push pressure resistance, it is most likely going to be in a sideways range trade for the next few months. Anything is possible, but because of everything that is starting to balance out, if Europe truly starts to go online next week and over the next 2 weeks, that puts us into May, and they start to stabilize there, and if the U.S. starts to set something where by June they start to come out, well, then that means what? We'll start to get some free flowingness, but until then, I think we're going to start to get into something where range traders are going to have a lot of fun buying into lows and selling into highs all day long, while both longs and shorts are going to get, I think, pretty much chopped up. Now, right now, we have this signal, so right now we're going to follow that, and this is what we're looking for. Obviously, this also coincides with our other ones. So this is something why we're bringing up all these signals, is that right now we have where some markets are trading in tandem, some are trading opposite of each other. But one thing that is happening is that there's a bunch of signals that are coinciding where the dollar is a bull and these other currency crosses are not. So this is what these things are manifesting. We've looked at it in the first two markets. These are the two major markets that drive the dollar index. So we have the dollar index that gave us a signal. We have the British pound US dollar and the euro US dollar also that's given us a signal. Now let's look at the US dollar Swiss, which is one of our flight to quality currencies. This one, ironically, did what yesterday? Well, it gave us a piercing line buy signal as well. So we have an upside target zone of 97.22 up to 97.58. This falls short of our upside breakout point. If we were to get above 98.02, that puts us in a really, really strong position for the dollar and has us probably challenging this 99-cent level. Now remember, parity is something this market has had a very big problem with over time. Now we have just made a lower move high and a higher move low. What is that indicative of? A short-term neutral behavior. So we have a buy signal that gives us a bias towards the upside. We still have to pierce this downward sloping resistance line that is setting the short-term trend, which is bearish and containing this market. But like I said, if our dollar index scenario that we're going to come into a choppy sideways zone, which will be good for, once again, range traders, but the major currencies might start to set. Now, we're looking also at, like, let's say we get into a chop in the Swiss, and we're chopping between, let's say, 98 even and 95.90. So you're looking at $2 to $3 range basically to chop around, and that is actually, if you go back historically, that's pretty good for the Swiss. It's actually a lot of movement, and that's not unlikely to happen. That's what was going on before this big shakeup. So now are we going to go back to business as usual? That I don't think is going to happen right away. But I do think that in the short run, as Europe comes back online, remember, let's look at these coronavirus totals. Now, Switzerland, they're a little bit further down, but still they're not at the bottom of this curve. You know, I mean, there's other countries obviously that are above them, but then they're bigger countries. So Switzerland was one of the earlier ones in the EU to get hit, but they're seeming to manage it very, very well. So what's worrying me the most is this Iran and Turkey thing, that it continues to grow, and I think they're going to eventually start to overtake the UK and France. If that does happen while the EU is flattening, then it's going to give us a lot of signals for these other currencies. So we have, once again, we have the dollar strength coming in with this signal with the US dollar Swiss in the short run. This is something that we're looking to go into over basically the next 3 to 5 sessions. So somewhere into next week, not necessarily going on for a long time. So if it does happen in 3 to 5 sessions where we get up into this 97.22 to 97.58, and then if it falters, then it once again reinforces our dollar thing. So we're not necessarily becoming a bull or a bear for any market right now. We are just short-term bias as a dollar bull. But then it's going to basically then come into where I think we're going to once again come into sideways, where we're just going to see the market start to fluctuate and give us a couple little bit of short swing trades. Intraday traders and range trade traders, I think, will clean up after this period. So we have another 3 to 5 sessions before we start to establish that. And once, think about that. Let's say we hit this upside target zone, we breach this downward sloping resistance, taking us off of any type of bearish tone completely. However, still, if we fall shy of this last swing high and we just stop in this target zone and start to bounce around where it's at now and come back to this area, staying above 95, well, over the period of the next 2 weeks into the middle of May, then that would be what? That would be a sideways trade here. So we'll see how this manifests. Let's look at some other markets to see what's going on. So we have the Japanese yen versus the US dollar. Now, did this one get a signal? Everything else, it seems to be getting a signal. No, it didn't happen. Yesterday, the market made a lower move low, but it does look like it's doing what? Setting up for sideways. So since this one is not doing very much and doesn't give us a signal, there's really nothing for us to talk about with this one right now, is holding on to support. And I think that that's what it's doing, is it's setting a base. And then this is, once again, will coincide with the situation that we have. We've definitely already broken the bullish trend. As you can see here, we had this trend line here from here and like this. So you can see that the upward trend is now off the table, but then also the downward trend isn't necessarily very strong either. So this is right now, once again, we're calling for a neutral trade in one of our major currencies. Now, in the same trading zone, however, we did have a bearish engulfing line sell signal that was triggered in the Australian dollar, US dollar. Once again, you notice that we had that in our position here. We are short on the Australian dollar, US dollar. Right now, our downside target zone is 62.14 down to 61.54. This is a tough call here, especially if we're going to look for sideways. This could be in a much bigger range versus those other currencies, but that's because the volatility of this market has been very extreme over the past couple months. And especially as China comes back online, Australia has its woes. The world economy, if it's slow, is also going to have a weigh on the Australian dollar. But should this market stop in our target zone as time goes by, let's say into May, see how this downward sloping line is filling? This comes into our sideways zone. So it's very likely that this is establishing once again as the beginning of a basing area that we're going to settle into over the next couple months. So anything can happen. That we could be in a very big bearish run and take out support in a big way, or we could rally, take out this sell signal. Anything can happen. But right now, I think what we are going to see, if these other markets are in free-flowing capacity, like where they're all working together, we should buffer these target zones. We may not complete all the target zones, but start to enter them. And once we do, if, like I said, we are coming into this neutral period, that's when we'll see actually these trades to stop. They're going to halt on those little spots. They're not going to follow through, and then we're going to start to see more and more sideways as we start to come out of this curve across the globe, which hopefully, and this is something that I would hope everybody is looking for, is that we get past this coronavirus and get everybody back online, because this is just too much of a disruption for all of the world. Once again, we have the New Zealand dollar, US dollar, also in this trading zone that has a bearish engulfing line sell signal. Now, here's the thing that you have to look at. This is what is hard for when it comes to this trading zone. There's a little bit of a divergence. The New Zealand dollar, US dollar has been trending very similar to the Australian dollar, US dollar. But look at this. This sell signal was triggered. This neutral zone is below this swing low. So if this does get down to the target zone, well, then this definitely takes us off of any type of bullish correction mode, which we're in here, which has us right now in a neutral to higher posture. Obviously, overall, the trend is lower. We are coming right into downward sloping support resistance, just like in the Australian dollar. But if we come and hit this target zone, then we have a higher move low with a lower move low, which then confirms neutral. So that would say that this one, while the Australian dollar may have more of a chance of hitting support in the longer time run if it starts to fall apart once again, the New Zealand dollar, US dollar may not totally be in that same capacity. So we'll see. We'll have to. Right now, we're just looking for this trade to get down to this area, down to this 58.01, down to 57.20 area. So that's our target zone. Hopefully, we get into it. We'll see how this goes. We're looking for this once again to be like 3 to 5 days to manifest. So somewhere into the middle of next week, maybe not, or maybe even to next Friday. So we'll see how that goes. Right now, we have once again another signal triggered yesterday. Now let's look at some very extremes that we need to look at to give you give an idea about dollar strength. So even if the major start to pull back and go into sideways trade, here's another thing to consider why the dollar index may be buffering resistance consistently over the next couple months versus support. Look at the US dollar, Turkish lira. So once again, we go back to our COVID chart. We look at how Turkey is right now. Luckily, their death tolls are still very small in relationship to their number of cases, but their number of cases continues to grow just like it does in Iran. That area of the world is having trouble containing movement, and as long as they have trouble containing movement, they're not going to flatten out their curve. Look at this rally, how this is going. The lesser currencies versus the dollar, no matter what, are bears right now. They are just not able to sustain any type of reversal of trend. Anything that happens is just a short-term correction. Remember, we had these corrections here where we had we had 3 different sell signals. This one manifested as somewhat of a profit to break even. This one was turned around pretty much right away. This one reversed instantly in a day. So that's how strong this momentum is. Now, how high can this go? I have no idea. I would just not try and fade this market. I mean, look at this thing. You need deep pockets to trade to begin with. The spread to get in and out of this, no matter what, is wide to begin with. So if you're on the wrong side, you are really getting crushed, and especially if you once you get out, you're getting screwed on the spread as well. So this is for experienced traders with big pockets, and believe me, if we've been talking about this trend for months, you can go back and refer to our videos. We were talking about this back before 2020, that this trend probably was going to continue into this year, and that was pre-Corona. Then once Corona hit, and especially with the way things were going in the Middle East, there's just no way for this. This is just as steep as the Corona curve is there. When this, I think, will follow, this will start to plateau and maybe even get a true correction once we see a flattening of the curve and things going back to normal in that area of the world. Now we have the Mexican peso, which is another one to take a look at. On the Corona chart here, Mexico, luckily, is only right around just under 6,000 cases. However, the one thing is about Mexico with the coronavirus is that they were at just around 1,000 just a week and a half ago. So we had a bullish engulfing line buy signal that was triggered back on Monday. We have an upside target zone of 24.53 up to 24.85 pesos. So not that much higher. We're close to that target zone. You can see that we had just made a higher move high, and now we've made a higher move low once again. So that's holding the uptrend. But then here's something to consider. Let's say that the curve is starting to flatten and Europe really is going to come online next week and things start going well. Well, then let's look at what happens if we have the U.S. that starts to come online. Let's say that over the next week will be right around here. As far as in relationship, we'll have a little bit left in May, okay? So let's say by the end of May, we have an announcement that the U.S. is going to start to open up certain areas. And let's say that in the EU, the curve continues to flatten and diminish and what have you. So if we get the Mexican peso and it falls into this area here, but falls short of taking out this higher and move high, what does that look like? Well, we have a possible head and shoulders forming. So should that happen and we start to run out of gas in our upside target zone, once again failing to make a higher move high, taking out this high, and we start to fall back on support. As this upward sloping support line gets higher each day, if this fails, we'll definitely be targeting this 23.23 level. And if we take out this swing low here, we have what? We have the confirmation of a head and shoulders and a potential slide that could bring the peso back down towards 21 to 20 pesos. So am I bearish right now? Absolutely not. I think the fundamental thing you have to pay attention to with this trade is that if the coronavirus curve continues to grow in Mexico, we are not only going to take out this upside target zone, we most likely will take out this last higher move high and set ourselves up to pressure resistance first, maintaining this bullish trend. Remember, this market was in a bear market all the way up until the middle of February. Then this thing exploded in a completely radical way here with some incredible volatility. So if the coronavirus maintains itself and starts to grow, God forbid it has an outbreak in Mexico City, then I can't see how the peso is going to fall versus the dollar. But this, once again, is one of those currencies that's helping to give the dollar strength globally. No matter what, it's still showing that the dollar is where people are running to. You know, even if the bigger currencies are starting to base, if you will, so it's keeping them up. If you think about it, they've held up very well. None of these currencies, except for like the pound, has gotten slapped like these lesser currencies have. So now let's go to the US dollar Canada trade and see what happened there. So we've had all these signals all over the place. Did we have a signal in the US dollar Canada yesterday? Well, let's see. As this chart pulls up, you're going to see how it looked like. Well, yeah, we did. We had a bullish engulfing line buy signal that is targeting this $43.54 area up to $1.43. What is this? 50, just short of $43.59. Now, here's the thing you got to look at for this Canada trade. We've been trending lower, an overall uptrend. We have this gap that needs to be filled. One day it may be. But right now, what's going on? Well, this interesting thing about this is that this market has been in a free fall for over a month, but look at what it's done as of late, especially as of yesterday. So as of yesterday, I mean, we were bobbling against this downward resistance. It was holding, poof, like a balloon underwater. Today we're kind of neutral, but we're targeting this upside target zone. So now the thing about it is, how long is this going to take? Well, like we said with these other trades, probably 3 to 5 days. The key is, does this market fall apart and then start to go sideways like the other markets? Well, remember, this is one of our major currency crosses versus the dollar. It's one of our close trading partners. And I do believe that before we have a chance at filling this gap and getting overly bearish, that we are more likely going to come up towards our target zone, run out of steam. And even if we do take out this high, I wouldn't be overly bullish. I think that if anything, this is setting the range. And I think what we found here with yesterday's trading is that this is the base for the US dollar Canada right now. Until everyone comes out of it, this is the base. And I think this last high up here that was set back in March, this is the extreme. As long as things don't get worse, we're not going to get above that. So what we're going to do is we're going to start to bobble around probably somewhere from where we bottomed here today and then up somewhere around this upside target zone. Maybe even getting a little bit higher, but I don't think that we're going to be able to sustain a true breakout with this market. At least that's in the short run. I mean, anything can happen, but remember, right now we have made a higher move high, a higher move low, a lower move high, a lower move low, which is indicative of what? Now we're in a neutral to bearish market. So unless we do, and then even if we did take out this high, that would be a lower move low with a higher move high, setting us up for what? Once again, what was that? How we started this video? With neutral, which goes right back into, once again, full circle. Let's check this out. For those of you that came late in the video, the dollar index, we had that buy signal that was triggered for the index coming up here, but even if it does come up into here, what does that mean? Well, here it would be bullish to dollar, but it also sets the major currencies and the broad Forex market as a whole for a sideways neutral trading to occur, and the dollar index is probably setting its range where it's set the bottom already here around 98.25. We're going to probably get a good chance of ripping into this upside target zone, even if we take out this last swing, this lower swing high. It doesn't make us an overall bull. I think that we will still be contained once again by the high that was set up here back in, Let's get this back to a solid line. This around 103.07. So this high up here that was set back in the beginning of March, in the middle of March, this is our range here for the dollar index, probably going into the next couple months. We may be setting this range. We may be looking at this in 4th of July being like, oh, wow, look at this. Just choppy, 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 choppy. However, if that's the case, that's good for the world. That means we're balancing, we're absorbing the coronavirus, the curve is flattening, economies are coming back online, people are going back to work, things are stabilizing, the medical community will not be as taxed, and the world will be getting back to normal. Is it going to take a while? Absolutely. We are not coming out of this as fast as we went into it. There's going to be lots of repercussions. There's a lot of things that have to be hashed out yet, but the world is not coming to an end. An asteroid's not coming and smashing into our planet. We don't have a super volcano going off. This is just a pandemic that we will get through with time. It has its casualties like all wars do, but we're just at war with the environment right now, and we will win this war eventually, and we will get through this. So right now, here's our signals. Once again, let's take a real quick look at the euro US dollar just to see how this one is shaping up, since that was the first one that we looked at. Let's see if our trade is still holding good for us. And as we can see, it is hanging right on that support. You can see once again, we have our trades here. Of the 3 of them, we're right there in the market or up just a little bit. So those are doing well. And then we also have our U.S. dollar Canada trade. Remember, we had that bull, so that right now the market's at $1.4113. Our strike price is $1.40 quarter, so we're in the positive for that. Unless the market falls apart over the next day or so, that's going to be a winning trade. We have the U.S. dollar Swiss here greater than 96.75 for our first strike price. The market is right there. Should we get another boost over the next day or so, this will be a winner. The one we have to look out for is the way out of the money one, but that was a cheap buy. That was looking for any type of major gush, but who knows? We may have an explosion of buying on the U.S. dollar going into Friday. U.S. dollar yen here, we're at 108 quarter. Strike price right now, we're a buck below that, so we're waiting for a rally there. Let's see if we can get confirmation of what happens with that. So we still have another day to go on those options, and right now we're mixed bag of goods. So right now, what is it? Our P&L, we're up on the options, and we're also up on the FX as well. So please do not try and chase these trades. Remember, if you want to subscribe to our Signal service and have your trades managed, that's a different story. Never try and chase. This is you're always in the past, so you don't know when we alter our when we get in and out of the trades, let alone how we manipulate the risk and the targets and what have you. So that is done. Obviously, we do it in real time. You're in the past. So just use this as lessons on how to manage trades, or if you really like our signals and continue to see that this would benefit you, then you can follow us and join along and have your trades managed for you. We never touch the money. It's all in your accounts. You're just tag teaming off of our signals. So with that, remember, if you want to know how to trade these signals, and you don't even have to listen to me anymore, or at least when I tell you or when you find the signals, you know what to do with them. Whether you're a Forex trader, futures trader, options trader, binary options trader, stock trader, ETF trader, it doesn't matter. It works in all markets. As you can see, we started off with the dollar index, and we went into all these different markets with all these different signals, multiple patterns, high probable Japanese candlestick patterns. Read the book on Amazon.com in Kindle and paperback version. I prefer if you buy the paperback version, but it's a digital society. What can you do? And remember, through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that being said, we'll see you in our next video and see how these trades are manifesting. Hopefully they go to the positive. Otherwise, but they don't all work. Remember, we showed you, in fact, just to give you one last look, remember that these trades that we're showing you, some work, they don't always work, just to show you how they didn't. And remember, if you read the book, you'll know when to go exercise these trades and when not to. So on this one here, we had a signal on this day, and we also had one on this day. This one kind of made some money. This one kind of scratched really quickly, and then this one just went right back in its face right away. So these were 3 in a row where you just got chopped up on. But had you read the book, you may not have exercised those trades. So the only way you're going to find out is if you read it. I'm not telling you have to read the book. So once again, thank you very much for your time. Check us out every day at www.forex-trading-unlocked.com and subscribe to our YouTube channel, Forex Trading Unlocked, and pass it on to your friends too, anyone you think that might like this information.